Let me ask you about the euro. It has been insane. I thought at how strong it was for a long time. Then it fell to a 10-month low here against the dollar, and now today it's rising again. What's going on in Europe that's alleviating pressures on the currency?
Well, I think a couple things. First of all, nothing terrible happened over the weekend, and we're seeing a little bit of moderation of some of the worst fears in the Eurozone. And with that, we've gotten some rebound in equity prices over the last few days from the dark lows of Monday morning in futures. So I think that combination has given a bit of a boost to the euro as those correlations remain pretty high in the short run.
Hey, Bob, but even though we've seen a moderation of those fears, have those fears really gone away? And should we call them fears? Aren't they kind of realities that have to be dealt with when it comes to Europe?
Absolutely, and I think that more and more we're seeing European officials talking about a restructuring of Greek debt. The probabilities have gotten so close to 100% that there's probably not much more they can go. So I think the markets have gone beyond the fear of the unknown and now beginning to deal with the reality of the known. And the reality is that over the last few decades, we've gone through a number of debt restructurings. They tend to be relatively orderly processes, and I think with the IMF and the EU involved, if it does come out to a Greek restructuring, I think the markets are coming to grips with the fact that it could be a fairly orderly process.
Doesn't it have to, Bob? I mean, is there any other choice now for the Greeks?
Well, I mean, I suppose they could go through a massive restructuring and continue to try to get support from the IMF and the EU to go through this without the restructuring. But when you hear this much talk about it, it looks like that's a direction in which it's headed. That's certainly something our European rates team has been expecting by the end of this year.
Hey, Bob, though, what about Italy? We kicked off our broadcast talking a lot about Italy and how much more significant Italy is as a country and how their exposure in terms of debt. All of this is so much more significant. How confident are you that this doesn't trickle out over to Italy at this point?
Well, I think the markets are trying to push it in that direction. But, you look at the underlying fundamentals in the rest of the Eurozone. They really are meaningfully different from what they are in Greece. Greece is a bit of a special situation, and in the context of its debt load and its deficit levels and the lack of growth, certainly I think this one is moving pretty quickly to a conclusion. But I think if you look at the rest of the Eurozone, there have been some significant restructurings of their budget positions, and I think the situation is not as dire. So, I think growth is important. I think the extent to which the EU and the ECB can keep the banking system liquid, improve the prospects for growth, the better off we're going to be in the rest of the Eurozone.
What do you expect? I mean, as far as the contagion concerns, say we do see a restructuring of Greece, as the market's pretty much now ascribing a 100% chance to. Does that carry through to the bigger countries? I mean, Carol was asking earlier, if Italy has to restructure, is that, the end?
Well, I mean, if we get to that point, clearly the implications across the European banking system are much more severe, which is exactly why the ECB and the European authorities don't want to get to that point. Again, I think there are some structural differences between the situation faced by Greece and Italy, and even between Greece and Ireland and Portugal. So, I think we still have to look at what actions are taken. There's some big meetings the end of this week. Secretary Geithner is going to Europe also. The ECB obviously still going to be active in this process. So I think we're very far from a situation where Greece drags the rest into really serious negative outcomes. And I think that's what the markets are beginning to realize here in the last few days.
That's interesting, Bob. You definitely sound pretty calm and like a voice of reason when it comes to the situation in Europe. It sounds like we need to send you over there to talk to all the officials. I mean, they're having a tough time coming together on any real joint efforts, it seems, at this point. What faith do you have that ultimately they will work this out?
So they're having the same difficulties we're having here in the United States over fiscal stimulus and fiscal policy. Look, I think both the dollar and the euro are structurally weak currencies. We're seeing that play out in markets. Being over in Asia last week, you really feel the weakness of the dollar. Can European authorities come to an agreement on how to handle this situation? Certainly the ability is there. This is a political tug of war, not dissimilar to what's going on in the U.S. So it's difficult to have confidence when you have to get through difficult political decisions, but certainly the capacity seems there for Europe to come through this and to continue to provide support both on the monetary and fiscal side to get through this crisis. But again, you know, the problem is we haven't seen very proactive action, particularly from the fiscal side in Europe, and I think that's what markets are now going to sit back and watch.
Hey, Bob, for those who are freaked out, where's the safe haven to go to? Because gold obviously has been looking toppy and not able to continue its climbs. The Swiss National Bank has seen to it that people don't go to the franc anymore. People were going to Norway and Finland, and Sweden, I mean, but those currencies also are at really high absolute values. So where do you go?
Well, number one, we think the one sort of monetary asset that doesn't have a central bank working against it is gold. And we think with liquidity still being abundant in the global environment, we do think that gold probably still has some good characteristics, risk-reward characteristics, even at these levels. But looking beyond that, you know, there's a theorem in economic analysis called home bias. And what the home bias basically says is in times of risk, there is a bias for one to remain in their home markets. And I think we're going to continue to see some home bias here, where investors are less willing to move outside their own country and kind of hunker down for a while to see how this all plays out. So I would expect that, you know, in that environment, the dollar does okay, the euro does okay, and we just see some slowing of a lot of global capital flows around the world until there's more confidence on how things are unfolding. Against that backdrop, we continue to think that Asian currencies will perform well.
Okay.
But again, that's a longer-term process.
We got to run. Bob, thanks so much. Bob Sinche at RBS Securities.